Over the past few years, China has been buying up tons of gold, and at the same time, the country is seeing a significant reduction in their holdings of US debt, which are garnering international attention. This led many to wonder as to why China, one of the world's largest economies, is investing so heavily in gold and is selling off their US debt. For context, let's graph out the holdings of gold reserves of China. Here you can see that since the start of the 21st century, China's holdings of gold reserves have been on the rise. But there is a consistent shift happening in the past few years, since 2019. In 2019, the country held 1,950 tons of gold. By 2022, it rose to 2,010 tons. And then, as of the latest data available for October of 2024, China's gold reserves rose to over 2,280 tons. It doesn't seem like a significant increase, but it actually puts China as one of the largest holders of gold reserves. Here's a comparative graph on the largest holders of gold reserves by country. Here you can see that even though China is not the world's largest holder of gold reserves, they are still one of the top on the list, above countries like Switzerland, Japan, and a number of European countries. But some of you may think that this isn't significant. 2,280 tons of gold is nothing. At market value, they are worth only $210 billion, assuming gold is around $2,857 per troy ounce. That's nothing compared to China's total foreign reserves, which exceed $3 trillion. So, why does this even matter? Well, it matters because China has actually been amongst the largest gold buyers in the past few years. For instance, in 2023, China actually emerged as the single largest buyer of gold. They purchased over 224.88 tons for that year, followed by Poland and then Singapore. Furthermore, for 2022, they also emerged as the second largest buyer of gold, buying up 62.21 tons. Only for 2024 did they become the fourth largest buyer. But that is still a significant feat considering how they emerged to become a leading buyer in the past 2 years prior to 2024. And that is why these matter. It's not the fact that they are not the world's largest holder of gold, it's the fact that they have been one of the largest buyers of gold. And what's even more surprising about this is that gold as a percentage of the total foreign reserves of China has rapidly risen. Prior to the COVID-19 pandemic, China's gold as a percentage of total foreign reserves accounted for less than 3%. But as of January 2025, it is now over 5.9%. And at the same time, as we just mentioned in the start of the video, we are also seeing China, which was once the largest holder of US debt, to be reducing them. They have been selling US debt, which is also known as US Treasury, at a fast pace. It's as if China is trying to untangle itself from the grip of the US financial system, which, as many of you may know, is referred to as China's de-dollarization, which is a strategy aimed at reducing its reliance on the US dollar in trade, investment, and financial reserves. But while we have seen that there really is a reduction in US Treasury and the purchase of gold has been a trend for China, we have yet to discuss why this actually matters. Indeed, it matters not only for China, but it matters for the rest of the world. The reason why China's purchases of gold matters to the world is because when China is actively buying up gold at this rate, it actually influences global gold prices. For instance, when China announces large-scale purchases, it provides price support and can help stabilize global gold prices during times of market turbulence. Conversely, if China were to suddenly halt its buying spree, it could lead to short-term price volatility. There are many articles out there by analysts and strategies where they predict that this continued gold accumulation by China, along with similar trends in other emerging markets, may push gold prices higher over the medium to long term. Projections by institutions like JP Morgan and PIMCO suggest that gold could potentially reach or even exceed $3,000 per ounce in the coming years if current trends persist. That is why, as you can see in the chart right here, there is a significant increase in the price of gold. Indeed, this is attributed to China and other emerging markets' purchases of gold. Furthermore, another reason why this is so important for the world is because it is showing how China and other emerging markets are diversifying from the US dollar. You see, when China buys up gold reserves, they do so by reducing their reliance on US dollar-denominated assets, primarily US treasuries. What that means for the United States is that demand for US debt could weaken, leading to higher borrowing costs for the US government. If more countries follow China's lead, the dollar's dominance in global finance could gradually decline. This shift may also increase market volatility, as investors adjust to a world where the dollar is no longer the undisputed global reserve currency. But of course, that may not happen, or at least not happen in the next couple of years or even decades. But this is a trend that is worth looking after, as it showcases that China is serious about diversifying its holdings in its foreign reserves, not merely relying on US treasuries. To give you a context of how this plays out, let's table out the 2019 and 2025 international reserves components. Here, for our first graph, is the 2019 official reserve assets by category of China. Here you can see that a huge portion of this is composed of foreign currency reserves or securities, which are mostly US dollar-denominated assets, including US treasuries and other foreign bonds. Gold made up a relatively small percentage of total reserves in 2019, accounting for just $95.4 billion. But if we were to take a look at the data for 2025, we get to see that China's foreign currency reserves has been constant at $3.2 trillion, yet gold has increased rapidly to over $200 billion, which is an increase of 116.5%. That's a big increase, even though China's foreign currency reserves didn't really go up that much. Now, another thing to understand is that even though what we have shown so far are quote-unquote official numbers, there are actually some reports out there that China has been buying up gold in secret. Yes, that's right. Some reports suggest that China's actual gold reserves might be significantly higher than what is officially reported. Analysts believe that China has been strategically accumulating gold through state-owned banks and other undisclosed channels to minimize market disruptions and avoid alarming international investors. But since this is still debatable, and some question the authenticity of these reports, we'll only follow the official reports. Now, we have to discuss the impact not for the world, but now for China. Will these gold reserves impact China's economy positively? Well, the answer is actually yes. One of the most significant reasons behind China's aggressive gold buying is its desire to reduce dependency on the US dollar and other Western financial instruments. Geopolitical tensions have increased the risk that the United States may use its dominant position in the global financial system to impose sanctions or other economic pressures. This is particularly relevant in light of events such as the sanctions imposed on Russia, which have prompted many countries to rethink their reliance on dollar-denominated assets. As we mentioned earlier, China's enormous foreign exchange reserves, valued at over $3 trillion, have traditionally been invested heavily in US treasuries and other dollar-denominated assets. However, this strategy carries its own risks, and that risk is sanctions by the United States. By diversifying their reserves and reducing their reliance on the dollar, China's economy, both present and future, is better protected from potential economic and financial disruptions. On top of that, there are also good reasons why China should buy up more gold reserves, and that is because when we compare China to other developed economies, like for instance the United States, Germany, or even France, we get to see that these economies hold so much gold as a percentage of their total reserves. For instance, let's graph out the chart about gold as a percentage of their total reserves. Here, you can see that gold actually takes up a lot of these economies' total reserves. For Germany, France, and Italy, it takes up more than 70% of their total reserves. That is nowhere near where China is at. The reason for that is simple, and as we mentioned throughout the video, it's because they have traditionally been holding US treasuries rather than gold. By holding gold rather than US treasuries, China would be shifting its reserves toward a more tangible and historically stable asset. Unlike US treasuries, which are subject to the decisions of the Federal Reserve and the economic policies of the US government, gold is independent of any single country's monetary policy. This makes it an attractive alternative, especially in an era of increasing geopolitical uncertainty. So, it's not all about geopolitics that matters here. It's also the fact that gold itself is an important asset that many central banks hold globally. China's aggressive accumulation of gold reserves is a multifaceted strategy rooted in economic pragmatism, geopolitical caution, and a long-term vision for national security. But anyway, do let us know what you think. Thanks for watching.